What's up guys, Johan Lorenzo here. Welcome back to the channel. If you saw my last video, you would have noticed I recently sold all of my Dividend stocks in my public Webull account. And I know a few people weren't too excited to hear that.
Bro, this is so dumb. You are the worst investor in the world. Dislike, unsubscribe.
Seriously, it went something like that. But today I'm going to show you how I made over $9,400 this week trading options. If you think making over $9,400 a week is a sweet deal, give this video a big thumbs up and subscribe to the channel if you haven't. So with that said, let's get into the video. So we're going to go into Robinhood. And as you can see, the price of Tesla is going up and bouncing around today as usual. It's a very volatile stock. We have 100 shares at the moment and it's at $1,071. So that's the only thing that's moving the portfolio around, and I have one share of Nvidia and one share of OPK. But let's get into another call for Tesla, right? So I sold a call for Tesla here. As you can see, it's a $1,125 call. I collected a total of $2,450. It expires today, the 27th. So what I'm going to do is I'm going to buy this back and I'm going to resell it, okay? So as you can see, I got an average credit of $24.50 on this call. It is only worth right now, the current price is 11 cents, which would be $11. So in a nutshell, if you're new to options, you always got to multiply whatever the contract price is by 100, because each options contract controls 100 shares of the stock. So where it says $24.50, it really means I collected $2,450. So here at the bottom, it will show you that on the bottom right hand where it says history. $2,450 I collected for this call. So now my goal is to buy back this Tesla contract. I'm going to click on the option call. It's only worth 11 cents still. I'm going to go to it. I'm going to buy it back. One contract. The limit price, I'm going to put it at 11 cents. I want to get out of this options play as soon as possible, so I will enter the ask price in this instance because that will get my order filled right away. And as you can see, we got one of one completed already. So, okay, we're going to click done. Now, I'm out of that position. I just have my 100 shares of Tesla. My account's up about $1,000 for the day, which is pretty normal. I expect that usually up $2,000 or $3,000, down $2,000 or $3,000. When you're holding 100 or more shares of Tesla, that's normal. So we're going to go to Tesla. We're going to click trade. We're going to do trade options, and we're going to do January 7th. For January 7th, I am thinking of going 1110 call. We're going to hit that. We're going to do one contract, and we're going to make about 2,000, and let's do $70. Let's see if that fills. We're going to swipe up. The order's received. Let's see if it goes through. If it doesn't, sometimes you just have to replace it, but it's no big deal. You guys will get to see here live. As you can see, sometimes the order takes a few seconds, right? There you go. It just went through. If not, you could easily put replace order, bring it down about 5 cents, maybe 10 cents, and it'll probably get filled right away that way. But no big deal waiting an extra 10 seconds, okay? You click done. We're going to go back to the main screen here. As you can see now, I put an order to sell Tesla at $1,110, and I collected $20.70 for this contract, which means I really collected $2,070, okay? Now we're going to go back, and I want to get into my buying power is $92,000. So I still want to make some more money this week, right? So I want to sell a couple puts on AMD. So we're going to go to AMD here. As you can see, I'm going to click trade. I'm going to click trade options, and we're going to go January 7th again. Now remember, in this instance, I don't own any shares of AMD. So I have to sell puts, right? Because I don't own the shares. We sold a covered call because I own 100 shares of Tesla. Now we're going to sell cash secured puts. Here we go. AMD has been trading within a range that's bouncing around anywhere from 138 to about 155, 156, 157. I feel perfectly comfortable buying it right now at 145.40. So I'll take it for a little bit of a discount. I would like to get into it right now just in case it does come up a little bit. Because when you sell a put, if this price doesn't go below 145, right? Let's say I choose 145. If by Friday, January 7th, this price is above 145, I'm not going to be able to buy the stock. I'm just going to keep the premium. But if you're scared that it might run up on you and you're not going to be able to get in, I would say just buy the shares head up, buy 100, 200, 300 shares, whatever you want to buy, and just sell covered calls on them. That way you make the money on the shares and you make the money on the premium. In this instance, I feel like the market is still a little volatile. I know Tesla and AMD are going to bounce around a little bit, so I'm not too scared that it's going to jump up in price and run away from me. What I'm going to do here is I'm going to sell a few puts. So for this one, I'm going to do, I do like the 145 price. I feel comfortable owning it at that price. And again, guys, you have to do what you feel comfortable here. What is the price limit that you're fine with holding the stock? In my example, this example right here, I like 145. That's perfectly fine with me. I will hold this for 2 years if I have to. So 145, we're going to go to the amount of options. I'm going to put 6 contracts, okay? And we're going to do a limit price of 3.60. Let's see how that looks. That's going to be a minimum credit of $2,160. That's what we're receiving in premium. So we're going to swipe that up. And as you can see, it should get filled pretty quickly here. There we go. Your order to sell 6 contracts of AMD at 145 put have been filled. So 6 of 6. Now, we're going to go down to the price here. And as you can see, we've collected $2,184 in this, okay? This is the order right here. $2,184. That's what I'm collecting to purchase AMD at 145. So now think about this, right? I'm going to purchase AMD at 145 by Friday if it's below that price. So let's say AMD goes to 144 bucks. By Friday, it goes to 144. You're thinking, well, Johan, you're losing money on those shares because you're buying it at 145. Well, technically, I'm still winning, right? Because this is the great thing about selling put options. I'm going to click on the play here. When we come down, you're going to see the break-even price says 141.36. That is actually my true break-even price. So if AMD stays above 141.36, it's still a major win overall, 100%. Because I collected $3.64 per contract, right? Per 100 shares, which is $364 off every 100 shares. So 145, you subtract $3.64, you are left with $141.36. That is my true break even. And if I do get assigned these shares, what I will do is I will put them up for sale depending on where the stock is. Worst case scenario, I will put them back up for sale at the strike price I got assigned, which would be $145. And I would collect another premium there, and that would bring down my price even more. So what I want you guys to understand is every time you sell a put or every time you sell a covered call, that premium that you collect, you could shave that price off of your original cost basis on the stock. Right now, $3.64 per share, I saved myself. If I do get assigned and I sell covered calls at 145, I will add that premium and add it to this. If the stock sells at $145, I know whatever I collected in this premium and whatever I collected in the covered call, if I do sell it, that'll be a discount that I had on the stock, right? So I know it sounds a little confusing and there's a couple moving parts to this, and you know, for the new person trading options, this might be a foreign language, right? But if you have any questions or comments, just leave them down in the comment section. I will get back to all of you as usual. But for now, let's go back to the main screen here and let's see. So we only have buying power, $7,200. The account is at about $197,000. And we sold a covered call on Tesla, which made us $2,070. And we sold 6 puts on AMD, which made us $2,184. So now let's go into Webull and do the same thing. We're going to go into Webull here, close that. We're going to go into the main screen. As you can see, the account is about $189,000. We're going to go, let's search Tesla here. Alrighty, so Tesla's at $1,067 here. We're going to go to options And if you've never done this on Webull, this is a great video for you to watch, right? Great little tutorial right here. Quick and easy. This is how you do it. So we're going to go to January 7th. Right here would be your strike price on the left. You just got to close this one depending on how you have yours set up. And we're going to click 7 days, right? January 7th. That's what I want. I don't want it to expire today. I want it to expire a week from today. So we're going to go for, on the bottom left is a single option. And then you're going to see puts. You could do puts and calls. This is calls. You could do both puts and calls. I don't want to do that. I'm specifically just selling a put here. So I'm going to click puts. I'm going to look for, I don't mind owning this at 1,000. I don't mind owning it right now. Same scenario, because why? Tesla's been as high as $1,250 not too long ago, and it's had a low of 900 bucks. So right now it's at $1,067. I'm perfectly fine buying this at $1,067 right now. So what will I do? I'm going to buy it at $1,065 by next week, right? That's the put I'm going to sell. I'm going to click that one. Right here, you're going to go to the order screen. You're going to click sell because you're not buying the put. If you were buying the put, it would be the complete opposite of what you're doing now. And that's actually very risky because you could lose all that money. In this instant where I'm selling the put, I don't really lose much money. I exchange my money for share price, which has intrinsic value that can bounce up in the future, and I can make money that way. When you buy a put, if it goes to zero, you lost all that money. You don't get nothing in return. So choose wisely. Here we go. We're going to put sell. I have a limit price here of 33.30. I think that's pretty fair. One contract, okay. We're going to click confirm. Okay. And as you can see, we already sold it. We got an average fill price of $33.30, which once again, what does that mean, ladies and gentlemen? $3,330, because each contract controls 100 shares of an option. I'm sorry. Each options contract controls 100 shares of that underlying asset. So you get me. We have $3,330 here. We're going to go back to the main screen. And we're also going to do AMD here. As you can see, I have 85,000 in buying power. Let's get AMD on the board. Here we go. So we're going to do trade. I'm sorry. Got to go back to the options screen. We're going to go to options here. We're going to do the same thing. We're going to do 7 days out. We're going to go January 7th. We're going to go to the 145 put. I'm perfectly fine with that price, just like the Robinhood one. 145 put. We're going to click that. We're going to do sell again. And we're going to do here, let's do 5 contracts, okay? We're going to do sell here. I'm sorry, the limit price is 365. Let's do 370. See if that works. Okay. And let's see if this gets filled pretty soon here. And it does. So 5 out of 5 filled. Now, same thing goes, right? We collected $3.70 per contract here, okay? That is some pretty good money to buy a stock that I'm willing to buy anyway. I like AMD. This is why I love this strategy. And I know I ruffled some feathers when I sold the dividend portfolio, but let's be honest. This is basically making your own dividend. If you have shares that don't pay you a dividend, as long as you get to 100 shares of that, you can sell covered calls and make your own dividend. That's why a lot of guys love these covered call ETFs. They make good money because those ETFs sell covered calls, which pay people a little hefty dividend, right? So here, even though AMD is not a dividend stock, guess what? I basically just made them a dividend stock. So cut me some slack, all right? I know you guys, some of you were a little ruffled about it. A lot of you guys showed some support, said, hey, you got to do what you got to do with selling your dividend stocks. But once again, this is only temporary, guys. I still love dividend investing. I know some people were, hey, man, finally, sell dividends, finally start trading, getting into options. Dividends suck. Well, I don't agree with that totally either. I do like dividends. I just think in this instance, what I'm doing now, I'm going to take my chances and I'm going to trade my portfolio how I feel comfortable doing it. So in this instance, this is what we did today. And as you can see, it is a pretty good chunk of money, right? So let's just add it up real quick to keep a tally of it. So the one that and by the way, Webull's very easy to track all of this. So when we go here to the right-hand side, as you can see where it says last and average price, that is basically the last price of the contracts and the average price that you collected for it. So as you can see, my Tesla call, I collected 33.30 and it's worth about 33 bucks. So I'm up a little bit on that. Doesn't matter though. That's just minutes apart, obviously, from where we just sold it. But so we have 33.30. Let's go to the calculator here really quick. 33.30 is what we collected for that. And then we have AMD 370, right? So that's going to be, let's do this first. 370 times 5 contracts. We collected 1,850 from AMD. And then Tesla was 33.30 plus 33.30. That's $5,180 just on the Webull account that we just collected in premium. That's a pretty good chunk of change, guys. Let's go now to Robinhood and do the same thing. Robinhood, we collected on our call $2,070. So plus $2,070, we're at $7,250 for the week so far. Now we're going to go back and we're going to add the AMD one, which was a total of $2,184 plus $2,184. We have a grand total of $9,434 for the week in premium, guys. I know a lot of you, or I should say a few of you, didn't agree too much with this, but how long would it take you to make, or let's say, let me rephrase that. How much money do you need to have in a dividend portfolio to make $9,434? We're not even talking about in a month. Let's talk about a week, because this is in a week from now. $9,434 in a week. That's what I'm making in premium. And obviously, I don't want to be misleading. The price of these stocks, can go down. AMD could go down to 140 again, and I'm going to purchase them at 145 because that's the contract price. But then again, if you were to buy the shares head up anyway, they can still go down to 140, and all you got to do is just hold and wait and strategize from there. But in this instance, I am at least getting some money back in my pocket, and this is free buying power right here. This money I can withdraw from the accounts and I can keep it while I still keep the shares. So all in all, I really like this strategy. I think I'm just getting paid to buy stock that I would buy anyway. So for me, it's a no-brainer. I feel comfortable with it. Now, I wouldn't suggest anybody do this. Once again, this is not financial advice. I am not a financial advisor. This is just what I like to do to generate some cash flow. And this is what I've been doing for a pretty long time now, guys. And it's worked for me. So if it works for you, there's many other stocks you can do this with. You can do this with Facebook. You can do this with Microsoft. You can do this with Apple. The only thing is you need to have the money to sell 100 shares worth, right? If you don't have the money set aside, just work your way up to having 100 shares. Once you work your way up to 100 shares, you can sell covered calls. And basically, you could create your own dividend. Well, then you might say, Johan, I don't want to sell covered calls because I'm scared to get out of this position. Sell them very far out, guys. As you can see, I'll give you guys a quick example here. Let's say Tesla, right? We're going to go to Tesla, trade options. Let's say I really wanted to keep Tesla. I will do this very far out, right? So I would go January 7th on a week-to-week basis because that gives you a better chance to keep your stock. I wouldn't do this a month out. I would do this week to week, right? And I would go up to, let's say, 1270. That is world away right now. Even though Tesla can do it in 2 days, it's very far up, right? It would be a huge profit regardless, and most likely you'd be able to get back in. But let's say 1270. That's 178 bucks. Guess what? You just made 178 bucks to sell something that has a 96.63% chance of not happening, right? You see where it says chance of profit on the side by Robinhood. What you would do here is you were going to collect 178 bucks to have that call basically expire worthless. That's an extra 178 bucks in your pocket weekly, guys. This is weekly. If you did that every week for a month, let's just check what that is, right? It is the final price of 178. Okay. 178 times 4. $712 a month. You just created your own dividend. Even though Tesla doesn't pay a dividend, you basically just did. Obviously, you don't have the tax advantages to it, but you're creating cash flow by owning the stock, which at the end of the day, that's all that matters. If you do need help with taxes, I suggest you go get yourself a good accountant and figure it out that way. But that's some good money we're making here. I want to thank you all for watching. If you have any questions on how to execute these plays, feel free to leave me a comment down in the comment section below. I will get back to each and every single one of you. As always, with all that said, until next time, peace!